Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES held above the 73.5 to 75.5 support, which leaves the recent breakout still intact. Heading into the open, as long as buyers can hold ES above 73.5 to 75.5, there is still potential for a break to the upside. Now we are going to have to see a break above the 80 to 82 to confirm the buy side in control on the smaller time frames. If we can get a breakout above 80 to 82 on some decent momentum and broader market strength, then we can get a test of 84.5 and a move into 87 to 89, where perhaps we'll get another sell response or we'll see a sell response at 90.5 to 92. On the downside, a break below 73.5 to 75.5 would signal short-term weakness and bring the 69 to 71 area into play, which is the launching point of the post-FOMC directional move. It's still technically an area where responsive buyers can be active, but since we're using 73.5 to 75.5 as the micro bull bear zone, we need to see how the market is approaching 69 to 71, because a break below 73.5 to 75.5 signals weakness, and at least on the smaller time frames, the sell side would be dominant on a break below 73.5. So if we're breaking down on broad market weakness and some heavy downside momentum, then even 69 to 71 calls for caution. Below that, we have an HVN at 67.75 and Wednesday's low at 65.75. And that is still an area where, again, responsive buyers can be active. And the same deal goes for 62 to 64. It's still a zone where responsive buyers can defend. So a break below 73.5 to 75.5, like I said, would signal short-term weakness, but it doesn't mean that the entire market now becomes completely bearish. So even if we break below initial support, unless we're breaking on heavy downside momentum and excess weakness, buyers can still be active at the support zones below, and then we can balance perhaps at lower prices. On the upside, as long as we're breaking out on some decent momentum above 80 to 82, 84.5 would be a very easy price to test, and more than likely at that point ES would head up to 87, 89, and that area could, like I said, attract responsive sellers on first test. So anything beyond 87 to 89 is questionable, given that we are heading into the weekend and the market may just start to balance again at that point. So a break above 80, 82 could take us to 87, 89, but anything beyond that we'll have to assess in real time, because we would have to see some decent strength in the market to go higher. But since the buyers are overall in control, we don't necessarily have to stop at 87, 89. We could tag 90.5 to 92, maybe the 93.5 naked VPOC, and if there's a lot of strength and NASDAQ, let's say, breaks through yet another new all-time high, then we could tag even 96 to 98. So those are the main ideas heading into the open. We are still going to give preference to the buyers and still keep our focus more on the long side and continue to be conservative and cautious on any short setups unless we are seeing major signs of weakness on the day time frame. So those are the main ideas. Let's see if the buy side can continue to maintain overall control, and we'll take it from there.